Yeah, so for the Wharton competition last year, we actually used top-down macro analysis. And what that is first you look at the client, right? What are the client's needs? Then you look at the international markets. What markets are performing better? So if you think India is going to grow well, then invest in India. China's going to grow well, invest in China. Just looking at different international markets. Then look at different industries. Some industries are cyclical, like hotels, airlines, cars. So it might not be the best time to invest in those industries. But if you're looking for something high growth, you could invest in like healthcare, biotech, things like that. Then step 4 was a more quantitative analysis. You look at the alpha and the beta of the stocks. If you don't know what that means, alpha is just the return and beta is the risk. So we're trying to filter out based on how risky something is versus the returns of it. This is specific to the competition, but they narrowed it down to 12 sectors. And then they looked at ESG and sentiment analysis. ESG means environment, social, and governance. So you're looking at how the company addresses these challenges. So if they use renewable energy, if they have a established board of directors, things like that to make sure that the company runs well. And then asset allocation. They looked at how to divide up their portfolio. What percent are stocks, what percent are bonds, and what asset classes to invest in. They had a specific bond strategy that doesn't really apply to macro analysis, but they invested a certain amount into bonds. And then finally, they worked on rebalancement, and if a stock dipped too low, they sold more of it from its portfolio and just continuously adjusted the amount they had in each stock and asset class.
Yeah, and like pretty much what he's saying is that you're starting from a more broad category and slowly going down into a more narrow category. So international would be the whole globe, so that's a really broad category. So what is macro analysis? So pretty much macro analysis is you're looking at a large scale of an economy, and an economy is pretty much like the buying, the producing, the selling, all of that of a good. So different economies could be like a country, a nation, specific large regions, but all macro analysis is on a large scale. Micro would be on a smaller scale. Then what you want to do for macro analysis is you're trying to look at the indicators of a certain economy. So one thing that you can do is look at the gross domestic product, which is GDP. Also, we're going to post the slides later, so you guys don't have to take pictures. So one thing is GDP, which is the total amount of goods and service, the value of the total amount of goods and services that a country produces in a certain period of time. Then inflation is when there's more money chasing the same amount of goods. So inflation happens when overprinting of money happens. And so one way that overprinting of money happens is, let's say the USA so if you think about it, the USA has its spendings and it also has ways to earn money through taxes, but it also has spending like healthcare and stuff like that. So when their spending increases, but the amount of money that the government is getting stays the same, they need some way to address that issue. So then they go to the Federal Reserve and they get more money printed in the system so that they can spend more money on their expenses. But when more money comes in the system, that means there's more, when people have more money, they can spend more, which means that they have more demand for goods. So the more demand, but the same amount of goods, the price of the goods will increase because there's more demand. Does that make sense? And then unemployment. So generally when unemployment rates are really high, it shows that there's a lot of economic stress. And when they're low, that means that it's more of a healthy job market for people. And finally, interest is when people borrow money, they have to pay additional money because they're borrowing. And when interest rates are really high, it can show that that economy is not really doing well at that time.
Well, I'm going to cover. All right, before I pass it on to Arnav, I just wanted to cover top-down versus bottom-up investing. So if you guys invest, what you guys probably do is bottom-up investing. You pick a company first and then look at different factors such as their financials, valuations, business model, things like that. What top-down does, it's a more efficient way to screen stocks. You're able to look at broader markets and then narrow down more easily, rather than trying to go through each individual company and then finding something you like.
Okay, so when you want to analyze the broader markets, what do? You need macro analysis because, as he said, the unemployment, the interest rate, the the amount that the government's spending and what exactly the government's doing, you need to know all this before you invest in the stock market. Because what is the stock market? Does anyone know? Okay, so the stock market is just all the companies that come together in the market and they put their stocks for people to buy and sell them. And what that helps is that it increases the amount of people who are interested in the stock, which therefore they get money from that. So when you're trying to analyze the global markets, the national markets, or even a sector or industry, macro analysis is needed because it'll help in seeing those certain macro factors, and it can help you figure out in which sector, country, or like continent to invest in. Next, macro analysis is extremely helpful to look at the long-term trends, and those can be traced and utilized through the data. So has anyone here, so for example, has anyone here seen the 100-year inflation chart? Okay, so I'll tell you one thing about the 100-year inflation chart, is that in 1929, 1950, 1980, and I think 2008 were the last few inflation spikes in the last 100 years. And in all of those times, you'll see that the peak of the data of each of those spikes has been about 18, 14, 12, 8, and 4%. And while we have seen inflation, large inflation in 2020 and 2021, investors and institutions were able to correctly predict when exactly the inflation would stop. For example, in 2021, when the inflation was going from 2% to 4% to 8%, they figured that it would stop at about 9 to 10%. And so it's very important, and it could help, because if you know what the GDP is going to be like, the unemployment, the inflation, and as well as the interest rate of the country, you can realize benefits in the market if you're able to correctly predict those, which can be traced from macroeconomic data. Also, strong macro analysis can determine whether to invest in certain markets. I went through that with the second bullet point, is that if you can correctly predict it, you will know exactly where to invest, and that can really help your returns. And also, many analysts, fund managers, and experts use macro analysis. For example, have any of you here read a 10K or an 8K?
I've read a 10K and an 8K.
Okay, so you've read both of them. So what is the first thing in the 10K and 8K?
Just an introduction.
Okay, so after the introduction, what would be there?
The company financial statements.
Okay,
And 8K is
so
about business data.
right, an 8K is the quarterly report, but what the companies will always go in their 8K, 10K, in every single of their reports, the first step will be to address the macroeconomic concerns. They'll talk about the broader market, and that can really help to determine what business deals, what suppliers, the consumer trends. That'll help the company to determine how much supply they need, and so for companies that's useful. Experts, managers, and analysis use that. Okay, so also the price targets. So many times, have any of you guys watched like any Yahoo Finance, CNBC TV?
I've seen some of them. Yeah.
You've seen some of them?
I've seen them, and I've also watched other channels.
Okay, so a lot of these channels, they have the experts come on, and the first thing they'll do is they'll always start with the macroeconomic situation. That's really important because that's when you know where all the markets are going. Think about it. If that's most of the general public is interested in the macroeconomic, because it doesn't matter what a certain stock is doing, it doesn't matter what a certain industry is doing to some extent. For the most part, it's all guided by the macro analysis. And so here's a video by the JP Morgan CEO on the US economy and the Ukrainian war. This is from, I believe, last month.
You think we should let them watch it later?
Yeah, we're gonna
Oh,
post the slide. Just watch the video.
It's a
later.
quick 4-minute video. It's really insightful. Like, it's really good.
Alright, so based on all that information, an example we did on macro analysis is based on the US. Just some key things we included are some statistics, so the current GDP, unemployment rate, inflation, and interest rate. We also included some key takeaways, which kind of act as conclusions. We talked about the short-term pandemic-related unemployment spike. So you can see over here, due to the pandemic, unemployment rates shot up right here. And then inflation was at its highest peak in the 1980s and drastically dropped in the mid-80s. So you can see here, inflation's at its highest point in the 80s. I don't know if you can read that, but it drastically dropped mid-80s.
Okay, so the last point is that another takeaway of the U.S. economy is that we may be in for a long-term bull trend for the 2020s. So as you can see, the unemployment is at almost an all-time low in the inflation. While this might be a few months old, the inflation right now is at about 2%. And that's important because the GDP, it's growing. The unemployment rate's almost at an all-time low. Inflation's at 3%, and the interest rate, or the federal funds rate, is at about 5.5%. And so what this means for the long term is that all of those numbers are very favorable for the U.S. macroeconomic situation, and that could cause a bull market for the 2020s. Because there was a bull market. We don't have the price graph up here, but if any of you guys have been following the stock market, there was a recent bull market, and usually after bear markets, long-term bull markets can happen.
Yeah, so we have a mini project for you guys. This project will be due by next week, so before our next meeting, it's due. We want you guys to work in by yourselves or maybe 2 people at max in a group. And pretty much what you guys are going to be doing is you guys are going to pick a country, and with that country, you're going to do all the macro analysis, similar to the one that we did before in the example. And you guys just want to analyze that country and show its long-term. So macro means more long-term and bigger, while micro is smaller. So you guys want to do a big scale, which is a country, and you guys want to do a big scale analysis of that country. And yeah, just pretty much write down like the inflation and that kind of stuff of the country.
And also, we just wanted to mention LaunchX is having a field trip to American University School of Business. And if any of you guys were interested in doing that, we're going to post a slide, so you'll be able to sign up for that, but it's also on Facebook. And one more thing, if you're nervous to present, I highly encourage you to present, because when you get to bigger scale competitions, it's really important. And if you can do it where the stakes are super low and you're still able to learn, it's a great opportunity to take.
Yeah. Oh yeah, and when you guys finish it, so what we want is just one slide explaining what you guys have done for that country, like what your macro analysis of that country was. And then when you guys finish, email it to officialtgic@gmail.com. Yeah.
So like pick groups, pick a country, and then come up to us and tell us what country you're picking.
Yeah. Yeah, like right now, pick a country and maybe 1 to 2 people.